The cryptocurrency market, like every other market on Earth, has its ups and downs. Good news and positive feelings from investors send prices up, and bad news or negative feelings from investors can send prices tumbling. For every bull market, there's always a bear market that follows. This is part of the natural market cycle. In a bull market, spirits are high, and people start to believe that prices can only go up, until one day, they don't, and something sends everyone running for the exit, taking what they can with them on the way out. The false hope of prices only going up fades. When prices drop like this and sentiment is low, we enter the dreaded bear market. But it isn't all doom and gloom. There are plenty of opportunities to position yourself in preparation for the next bull cycle. Millionaires are usually made in the bear market with the right strategies and a bit of luck. So what can we actually do in a bear market? Well, you could delete all your investment apps, stop reading the news, and wait 6 to 12 months before checking anything related to investing. Thank you very much for watching, and I'm just kidding. This strategy is used by some people to help them control their emotions and stop themselves from doing something impulsive. But if you're here watching this video, chances are you'd rather do something in the bear market rather than wait it out. Before we get into it, let me start by saying that everything I talk about here is my opinion and not investment advice. The ideas and strategies I am sharing here are for educational purposes only. Cryptocurrency, NFT, and investing in any sort of financial asset can be risky. Please do your own research and stay within your own risk tolerance when making decisions with your money. Do not go investing more than you can afford to lose. This may sound cliche or hokey, but the number one thing you can do during a bear market is investing in yourself. During bull markets, projects go wild with things moving very quickly, and it is easy to get caught up in the hype of chasing the next big thing and trying to time the market. During a bear market, the hype dies down a bit, and everyone gets a minute to catch their breath. Take this time to really dig in and learn and build upon your knowledge. I'm sure that during the bull market you had a laundry list of things that you wanted to learn more about, or a skill that you wanted to develop. Now is the time to do that for yourself. This could be learning investment strategies, how to read charts, or even learning how to manage your own emotions and anxieties when it comes to investing. Warren Buffett once said that the stock market is a device for transferring money from the impatient to the patient. So enjoy the break in the constant rush of information and invest in yourself. And also be sure to do something for yourself that isn't related to investing, maybe a hobby or something else that you enjoy, to take your mind off of the big red numbers in your portfolio. The second thing you can do is observe projects that are still in the market, as well as projects that launched during the bear market. Bear markets have this magic about them. They make mismanaged projects disappear by deflating the hype that was keeping them alive. This is similar to how when the lights come on at the end of a night at the club and you see who managed to leave by themselves and who's passed out in the corner and needs their friends to carry them out. In a bull market, the party is in full swing and hype is at its peak. It's easy for a project to get away with releasing a white paper without actually doing anything valuable and see big jumps in price. But in a bear market, these hype-fueled projects come crashing down, and it typically takes them a long time to recover, if they do recover. Whereas with blue-chip projects, with a strong team and a good amount of value to offer their holders, the value of their assets tends to rebound a bit quicker, as investors see them as a long-term opportunity. Use this downtime when the bull market party ends to look for good projects with strong intrinsic value to invest in. Some great projects with a strong team and something valuable to offer may be down 90% from their all-time highs and still putting in the work to build on their core value offering. These may be projects that might have been too expensive to invest in before. But during the bear market, these projects may present a much more favorable entry price for you that you can invest in. Do your research, read the project's white papers, and get involved with their communities to see who has their ducks in a row and a strong business plan. You can also look into new projects that are just starting to build their product or service, and spend some time comparing them to projects that had seen 10 to 100 times growth during the last bull market. Understand why previous projects saw the growth that they did, how they got to be seen as valuable as they were, and what caused their price to drop. Then, apply those findings to a new project that you find. Are the new projects that you found going to serve a purpose that is unique and solve a problem or unlock opportunities for the niche they're working in? You could also look into what others are saying about these new projects and compare your analysis with anyone who is willing to share. Just be wary of confirmation bias. The third thing to consider during a bear market is continuing to invest in the projects that you think are going to do well in the long term. After doing your research and checking in on the projects and assets that you currently have in your portfolio, if your analysis of those projects is positive and shows signs that those projects have potential for long-term growth, you could begin investing into these projects using your preferred investment method. Keep in mind, though, when investing, it is better not to invest all your money all at once trying to chase the bottom of the market. Otherwise, if the price goes lower, you won't have any more money to put into that asset. One strategy could be investing in smaller, consistent amounts over time. This is called dollar cost averaging. Another could be to invest by dividing the money that you have to invest into smaller amounts of different sizes. With this strategy, you would be investing more the further down an asset's price goes. Generally, dollar cost averaging and investing in larger amounts as the price go down are strategies that are safer than trying to time the bottom and chasing the dip. The fourth thing that you can look into during a bear market is airdrops and participation incentives. Some projects give airdrops of their tokens to users who participate in their project. This could be completing a set of tasks on decentralized applications built on their networks, or playing their games, or testing the functionality of what they're building. Some projects also give airdrops for staking their tokens, or tokens related to their projects. This is commonly seen with projects such as Layer 2 projects on Ethereum, as well as other projects built on other Layer 1 ecosystems, like Avalanche or Cosmos, among many others. Similar to this, in the crypto gaming space, many projects use airdrops and rewards to incentivize people to play their game, and for sharing things on social media to build their player base. At the time of recording this video, one example of these sorts of incentivized participation projects is the Sandbox. Now, this is not a recommendation, and I'm not sponsored by Sandbox, but I am participating in the third season of the game's alpha phase, which includes rewards for playing the game and participating in the experiences being hosted in their metaverse. I am sure this isn't the only example, and you may come across others in the research that you do if you followed the first 2 points in this video. If you've gotten this far into the video, please let me just pause here and say thank you so much for watching. If you like this sort of content and want to see more of this, please be sure to subscribe and turn on notifications so you get alerts when we post new videos. There isn't really a perfect strategy for investing in a bear market, but there are things that we can do to help grow our portfolio value and our understanding of the way markets work. I hope that you find what works best for you and your financial goals, and hopefully learn something new and have fun along the way until those numbers in your portfolio turn green again. Now, my question for you, what are you doing during this bear market? Thank you so much for watching once again, and I hope to see you in the next video.